A lot of people say that Bitcoin is just a Ponzi. Even economists say that. But I think that's wrong. It's worse than a Ponzi in a couple of key respects. For one thing, in a Ponzi, if there's a run, if the scheme collapses, you wait around long enough, you might get a sizable chunk of your money back. In fact, some 12 years on, 13 years on, the investors in Madoff's scheme are up to 70 cents on the dollar, and it's still rising. Every dollar they put in, they've gotten back 70 cents from the bankruptcy court. What happens if Bitcoin collapses? Well, there's going to be nobody you could go after. You end up with nothing.
And I guess that is one possibility, although with every moment in which there is not a collapse, there's the potential for some legitimate use case to come about. And I wonder if you think that's what the bulls are counting on. Well,
Carl, it's been a while. We've been waiting for the use case. Originally, it was going to be a marvelous transaction vehicle. It turns out it's pretty clunky as a way of making payments when lots of people are trying to make payments. There's congestion, things slow down, it gets expensive. It doesn't look like a real good payments mechanism. New ideas are coming down the pike for what it'll get us eventually, but we're still sort of waiting. So I take your point on the optionality, but it's been a while now.
Robert, this is Joanna over here. You make a strong point in your piece about the cost being a lot around the miners and the electricity we're using. There's some that say this is going to go down. Would that affect your argument at all?
Well, Joanne, thanks for bringing that up, because I really want to make the point that there's another respect in which Bitcoin and Ethereum to date are worse than a Ponzi, and that is that they're negative-sum games. What is a Ponzi? Ponzi, you take from Peter, you give to Paul. You might cut yourself in for some, but basically it's a redistributive game. With Bitcoin, though, every day there's money being paid to miners by investors. And that money is mostly going up the flue. It's mostly going up in smoke. It's mostly burning electricity, going through machinery. And that's all social costs. That's all loss. So even if you could, in the event of a collapse of Bitcoin, even if you could try to go after the money, a lot of the money, some over $20 billion to date, is gone. It's gone. It's not there to be recovered. And that makes it worse than a Ponzi.